All right, good morning. It is 8:05 a.m. Central Time on Tuesday, August 22nd, 2023. And let's jump right into the trade planning exercise for today. Now, today our short-term bias is neutral, and anytime our short-term bias is neutral, the ability to read the market in real time and determine the intraday bias and structure becomes critical. And that's also why pre-planning trades on these types of days can be more challenging because the day can end up being quite dynamic. Right now, as we head into the open, the market has been trying to trend higher, and in the overnight session, the market put in a breakout above yesterday's high, and clearly an uptrend is in play, at least in the overnight time frame. And now the question is whether that overnight trend is going to continue and result in a move up into the initial resistance zone at 49.75 to 59.75. And in order for the market to head up into initial resistance, buyers need to hold ES above the 44.06 to 15 initial support. And if the market is really strong, then it could even hold above the 44.19 to 24.5 pre-market support, which is the most aggressive area of support. As a side note, the pullback continuation setup is one of the more challenging setups because it requires the ability to determine the odds of continuation. And if you zoom out, that's kind of what we're trying to do today on a slightly larger time frame. We're trying to determine the odds of continuation, and that is the most challenging thing to do. That also creates a situation where there is a higher level of risk or higher level of uncertainty, because determining continuation, especially in this type of mixed environment where the bigger picture bias is bullish, the intermediate time frame bias is bearish, the short term is neutral, that can be quite challenging. So today I think it makes sense to be in capital preservation mode rather than being overly aggressive on any trades we take. So I'm going to set up a couple of longs at pre-market support and initial support, but whether those longs get executed in exactly this way will depend on the real-time intraday situation. So the most aggressive long that we could take, targeting a move up into initial resistance, would be at pre-market support, 44.19 to 24.5. The conservative long would be at the initial support zone. The challenge with buying initial support is that a truly strong market wouldn't need to go all the way down into initial support. So just by the fact that ES is testing 44.06 to 15 would already put the overnight trend into question. It doesn't mean that eventually the upside can't come back into play, but a really strong market would hold above the 24-hour session VWAP and midpoint, which, as you can see, is within the pre-market support zone. So if ES is really going to head higher into 49.75 to 59.75, then ideally we want to see the VWAP and midpoint holding, or if it gets breached by a point or so momentarily, but then buyers step back in, that would be okay as well. It doesn't mean it has to hold to the tick, but if we break below the mid and VWAP and then start holding below it, that would be a red flag for buyers. So we just need to be a little more careful at initial support, and even if we take the trade, we'll then have to monitor and see whether buyers can get ES back above the mid and VWAP and the broken pre-market support. So that's the only caveat here. So that really highlights one of the challenges for today, where if the upside's going to work, we're going to have to aggressively get long at pre-market support. And if we wait for the conservative long, then the upside potential may not even be there anymore. And you can see how that would create a more challenging environment to execute. So we've set up a long at initial support, 44.1175 being the entry. I think we can be a little more aggressive over there. I'm going to set the final target here to 49.75. That allows us to get in at 12.75. I'm also going to create a copy of pre-market support and put the stop down at 12.5. So we're going to use a daisy chain option here to see what that gives us. So 19 quarter, which would be leaning on the 19 high volume node, with our stop at 12.5 and the next entry at 12.75. This would be a relatively conservative way to execute the trade. But again, whether we submit these orders or not will depend on the real-time situation. As long as the market is not breaking back down on any notable downside momentum, I think that first test of the 19 to 21 area and initial support will get a response. So as long as we're not selling off, starting the session with an open drive, or something where it just seems like the overnight strength is completely disappearing, I think we can attempt the long, and from there, as long as we can get our scale out, there would be potential to let that trade turn into a proper winner into 49.75 and the overnight high. The other thing I like about the initial support setup here is that our high probability target is not even the overnight high area. It's 35.75, which is the high from August 17th. So it gives us a little bit more conservative high probability target, whereas the high probability target at pre-market support is the overnight high area, and that is only going to work out if we get that upside continuation. Now, if we take out initial support, the likelihood of the market returning to the overnight high would be much lower, and a break below 44.06 could result in a test of the overnight low and possibly even a break below it. And buyers are likely to still be active at 43.96 to 44.03, but taking out the overnight low would again lower the odds of the market then revisiting the overnight high. So again, it would be a sign of weakness. It would be an intraday bearish indication. So we'll set up a long here near the overnight low area, but I think we're going to have to be much more cautious with that one. So I'm not really looking to execute around 44.01 half. Again, when the short-term bias is neutral, that real-time pattern becomes much more important. So, if the market is rapidly heading down and gets exhausted into the overnight low area, then there may still be some potential to get a bounce back up towards 44.10 to 13, maybe 17 to 19. But you can see that, it's going to require defensive execution because, again, a strong market would not go all the way down into the overnight low. So not really very interested in going long near the overnight low, because if we get there, that in itself would be a sign of weakness, and a break below the overnight low would be an intraday bearish indication. On the downside, 67 quarters, 75.75 marks a range extreme. 84 to 91 is a decent spot to expect at least a response or reaction, and by the time the market reaches yesterday's lows, it would be quite exhausted, and it will likely attract buyers. So, we can consider that area as well. But really, if I'm going to be a buyer today, I want to see the initial support zone holding or the pre-market support zone holding. If those two don't hold, then I think we need to be very cautious on the long side and perhaps try to find an opportunity to short. So that's the other thing. When our short-term bias is neutral, we need to be open to the market moving in either direction. And again, the key here is to determine the odds of upside continuation. So if in real time, let's say there's a bearish disconnect on the advanced decline, or we're just noticing a complete shift in the character of price action where the sellers are just becoming much more dominant, Let's say we start the session with an open drive down, wide range bar, the market can't take out the opening range high. Well, in that case, maybe the high of days in. And then we need to completely flip our focus from buying support to now finding spots to short the market. So again, it just highlights the challenge of a neutral environment where our directional bias on the short term is neutral. It makes for a situation where you really need to be aware of what's happening in the moment, and a resistance area may develop in real time, and then maybe we lean on that to take a short. Because if this upside that we've seen in the overnight session doesn't continue, then we can also have a trapped buyer's situation that can come into play. Now, we're not using that as our base case. By default, we are going to assume that the overnight trend is going to have some legs to it, and that there is potential to head up into at least 44.47 and the initial resistance zone at 49.75 to 59.75. So that's the base hypothesis. But again, when the short-term bias is neutral, we need to be aware of what's happening in the moment. And if off the open we start noticing a complete shift in the character of price action where it signals to a lower probability of upside continuation, well, then we might have to pull back completely from the long side and flip our focus to the short side. And that is the big challenge for developing traders, especially on a day like this, because it requires a high degree of flexibility. But then once you have clarity on the day, then it requires decisive execution in perhaps a new direction, right? So if you're going into a day where our short-term bias is bearish or even neutral bearish, things can be simplified because we can just look for shorts at good trade location, exercise caution on the long side, and as a very good example, you can watch the video from Monday, August 21st, and you'll see that we had a high degree of clarity on the trades we were going to take. But on a day like this, where the market is gapping higher, opening above value, we need to see signs of initiative buying in order for the market to continue heading higher. We need to read the momentum situation. If the long is going to work, it's probably going to work from the aggressive location. These are all the little challenges that stack up to make for a more challenging, riskier environment that has even a higher degree of uncertainty, that requires even more mental flexibility and decisive action, but at the right time. So today's a day when it's going to be easier, I think, for developing traders to lose money than to make money. So with that in mind, we're just going to have to adapt and adjust our execution accordingly and adjust our mindset, where we're not going to lean more towards the risk-seeking side, where we're just being overly aggressive and taking the long and doesn't work out, flipping right away. That can result in chop. That can result in losing 2 or 3 R by the time you even figure out what's going on with the day. So rather than jump in too early, get overly aggressive, have that fear of missing out. Oh, the market might go to 44.50, or it might go down to yesterday's lows. So instead of having that perspective, I think today the focus needs to be on preserving capital, waiting for the right opportunity, being okay with missing it if the market doesn't set up in the way that we want it to set up. So for example, if ES pushes down into pre-market support, and that's the first time that the NYC tick is testing the zero line, that would make for a good buying opportunity. But if we balance at higher prices, then break down on a momentum shift, or with the tick holding completely below zero, printing minus 7,800, well then of course pre-market support is probably not going to be a good long. So today is going to be a bit more difficult, and the important thing is, because we can identify these types of situations in advance, we are better prepared, and we don't have to be overly aggressive, and we don't have to be overly active. We can let the dust settle. We can let the market kind of figure out and establish its footing to allow it to signal what the intraday bias is shaping up to be, and then if we find a good opportunity within that structure, we'll execute. If we don't, then we just let this one go, wait for the next ideal opportunity, which might be later in the morning, it might be early afternoon, it might be tomorrow. But I think that type of mindset will keep majority of developing traders out of trouble, at least on a day like this. And the less you lose, the less you have to make, right? The more of your profits you can keep, the less overall profits you have to generate. So preserving capital and not losing in certain environments can be very helpful to your overall edge and profitability. So we've talked about the long side primarily because of the overnight trend being so bullish. Now let's talk about the short side. Now with our intermediate term bias being bearish, we can still expect sellers to step in, but only at intermediate level zones. So if we're hitting a short-term inflection point or a area of resistance that only has an impact on the short-term time frame, then that zone doesn't necessarily have to hold. And that's why in the morning trade plan I mentioned that if we do see signs of initiative buying and we do get upside continuation, then we can easily test the initial resistance zone at 49.75 to 59.75. But if we're seeing trend up type conditions, then we could even test the next zone at 63.25 to 71.25. Now, if at the same time, NQ is getting even more exhausted into its own respective resistance, then it would make for a better shorting opportunity. Right now, the markets are being led back to the upside by the NASDAQ. NQ got overdone on the downside, and now perhaps it needs to get overdone on the upside in order for sellers to comfortably step back in. So initial resistance, I think, there could be the possibility of a short setup there, but the main concern is going to be the targets. That if we go up into initial resistance, and let's say even if we do attract sellers there, which is quite likely, it's not likely that we're just going to slice right through it. I think if we go up to 49.75 to 59.75, we'll probably find sellers. We'll get a reaction, perhaps down towards the 39.75 to 42.75 broken resistance, which may act as support. And in order for a short off of initial resistance to turn into anything decent, we would need to see not only a reaction, but a failure at initial resistance. So I think the way that we should be structuring our short at initial resistance is we get the quick scale out to mitigate our risk, and then we play defense, and we should be on the lookout for signs of a momentum shift or a intraday reversal. If that materializes, then there would be potential for the market to go back down into the pre-market support and possibly the initial support zone. But we would need to see a momentum shift for that to happen. So we're going to take our scale, the high probability target, I'm going to set to one tick ahead of pre-market support. And the final, I'm going to leave at pre-market support for now, because I just want to see what entry we can get. So 53 entry, 60.75 stop gives us 3R into pre-market support, and then maybe the market dips down into initial support. So if it does, it turns into a 3.5R setup. If it doesn't, then we get 3R into just pre-market support, and the most aggressive execution here for 2R would be at 50. So that's one trade setup that's possible. We'll do the same thing with this, except now from 63.25 to 71.25, our high probability target is going to be the broken resistance at 39.75 to 42.75, so the overnight high area, and our final target will now be the broken pre-market support. So that gives us 64.25 as a possible entry, and I'm also going to create a conservative daisy chain type setup at initial resistance where our stop is up at 64.5, and we'll see what entry that gives, 56.25. So if the market is heading up on some decent momentum, then it might make sense to wait for 56.25 and put your stop at 64.5 at the next zone. And that would be a defensive execution at initial resistance, and this would be more offensive. So on the upside, I'm not expecting the market to take out 71.25. If it does, we can still get sellers at the next zone at 76 to 85, and that would be a range extreme. So if the market does get there, I think we can still consider shorting it. It is going to depend on the time of day. I think late afternoon shorts are going to be riskier just because we can get a short covering spike into the close. So time of day is going to make a difference. Ideally, support or resistance gets tested in the first hour. So this is where timing and sequencing of events comes into play. If ES tests initial resistance prior to testing pre-market support, that would make for a better shorting opportunity. But if ES comes down into pre-market support or initial support, balances, consolidates a bit more in the upper part of the overnight range, and then breaks out, we can still get sellers active at resistance, but the targets would be questionable at that point because the low of day may be in, the intraday bias might be more cemented by then, and the risk reward may not be there anymore. So again, just goes to show you the challenge of execution today when the short-term bias is neutral and the market is gapping higher. So I think we'll wrap it up with that. So let's quickly take a look at the potential setups we have. So short side play, 53 to 56.25. I'm actually going to create one more setup here on the short side, leaning against the overnight high in case, in real time, there's simply a lack of strength or a clear bearish disconnect or something. So potential short at 39, probably not because we need to see something in the moment. Potential long at 19.25 or 23.5 and 12.75 as well. These lower longs I'm not as interested in because at that point I might want to find a good shorting opportunity and use the support areas below as targets. So really the main long opportunities today that I'm going to focus on are going to be the 12.75 entry, potentially 19.25 or 23.5. So one of these, 23.5 or 19.25, not both, and 12.75. And then on the short side, most likely 56 area on first test, especially if the market's exhausted into it, and 64.25. So if, let's say, all of these trades fail today, it would be minus 4R, right? Let's say pre-market support fails, initial support fails, and I take both. I'm down 2R. Let's say then the market reverses or heads higher and I take 53 and 64.25, that's another 2R. So the worst case scenario with this type of strategy is minus 3 to 4R. Like that is what a absolutely terrible day would look like. And those don't happen that often. All right, guys, we'll wrap it up with this. If you found the video to be helpful, please like and share it with other traders. Good trading and good luck today, and I will catch you on the next one.